Everyone is obsessed with Nvidia, but the smartest money is quietly buying the landlords that Nvidia pays rent to. If you think the AI boom is over, you are missing a physical reality that demands massive new infrastructure. Artificial intelligence consumes 10 times the power of traditional computing, forcing a total rebuild of the electric grid. Most retail investors are chasing volatile chip stocks, risking huge losses if earnings miss by a penny. But there is a backdoor way to play this revolution that offers steady dividends and lower volatility. I am talking about the physical data centers, the concrete fortresses where the cloud actually lives. Today, we break down the 4 best data center stocks poised to dominate the next decade of growth. We will cover which one pays the highest yield and which one is the aggressive growth play for maximum gains. Let's first understand why this opportunity exists and why the window to enter is narrowing. Legacy data centers built 10 years ago simply cannot handle the extreme heat of modern AI processors. Old server racks handled 5 kilowatts, but new Nvidia architecture requires racks handling over 100 kilowatts. This forces tech giants like Microsoft and Amazon to lease space from the specialized companies we are discussing. Demand is outstripping supply in key hubs like Northern Virginia, driving vacancy rates to record lows. Our first pick is the blue chip safety play, Equinix, ticker symbol EQIX. Equinix is the airport of the internet, where all major networks meet to exchange global traffic. They operate over 200 data centers in 30 countries, creating a network no competitor can replicate. Their business model relies on interconnection, which makes their revenue incredibly sticky and predictable. Once a company moves its servers into Equinix, it is logistical suicide to try and leave. This stickiness has allowed them to raise dividends consistently, funding a secure retirement for shareholders. Equinix is for the investor who wants to sleep well at night and prioritizes safety over massive risks. If you want higher income, look at stock number 2, Digital Realty Trust, ticker symbol D. Digital Realty is the wholesale giant renting massive server halls to the biggest tech companies. Unlike Equinix's retail model, Digital Realty signs long-term leases with hyperscalers like Amazon AWS. This creates a steady cash flow similar to a traditional landlord collecting rent checks every month. They have an incredible track record of raising their dividend every single year for nearly 2 decades. Currently, they are aggressively securing power in constrained markets, which is the new gold of the digital age. The main risk here is tenant concentration, as they rely heavily on a few massive tech firms. However, Digital Realty is the best balanced option for investors seeking both growth and reliable income. Now, let's pivot to a unique turnaround story that many people don't realize is a data center play. Stock number 3 is Iron Mountain, ticker symbol IRM. You know them for storing paper boxes, but they are using that cash to build a digital empire. They launched Project Matterhorn to aggressively convert their business from physical paper to data centers. The brilliance is that their old paper business is a cash cow that funds their high-tech expansion. This strategy has made Iron Mountain one of the top-performing stocks in the entire real estate sector. They typically offer the highest dividend yield of the group, attracting deep value income investors. The risk is execution. They must manage the slow decline of paper while building complex tech facilities. But so far, management has proven the doubters wrong and delivered exceptional returns. Finally, we have the growth rocket. Stock number 4 is Vertiv Holdings, ticker symbol VRT. Vertiv is not a landlord. They build the critical cooling systems that keep AI chips from melting. As chips get more powerful, traditional air conditioning fails, and liquid cooling becomes mandatory. Vertiv is a global leader in this thermal technology and partners directly with Nvidia on new designs. Because they are a tech manufacturer and not a REIT, their stock price can be much more volatile. Investors buy Vertiv for capital appreciation, not dividends, as they have tripled in value recently. This is your speculative play, high risk, but potentially massive reward if the AI boom accelerates. So, how do you build a portfolio with these 4 names to protect your wealth? A conservative mix might be 40% Digital Realty and 30% Equinix for stability. Add 20% in Iron Mountain to boost your overall dividend yield and cash flow. Keep the final 10% for Vertiv to capture that explosive, tech-like upside potential. But before you buy, you must understand the elephant in the room: interest rates. Data centers are expensive to build, and companies borrow billions to fund this construction. If interest rates stay high, borrowing costs rise, which can eat directly into their profit margins. However, demand is so strong right now that they are raising rents enough to offset these costs. Another constraint is power availability. Utilities in places like Virginia are literally running out of juice. This creates a massive moat for existing data centers that already have power contracts secured. New competitors cannot just enter the market because they might wait years for a power hookup. Also, remember that REIT dividends are taxed as ordinary income, not capital gains. Smart investors often hold Equinix and Digital Realty in a Roth IRA to legally avoid taxes. Ultimately, this trade is a bet on the digital future of humanity and the internet itself. Whether we use AI for medicine or entertainment, the physical infrastructure must expand. These stocks allow you to profit from the trend without guessing which software company will win. We are looking at a multi-year cycle of construction that is arguably just getting started. Pullbacks in these stocks have historically been excellent buying opportunities for patient investors. Don't let daily market noise distract you from the long-term trend of data consumption. If you found value here, please hit the like button so the algorithm shares this knowledge. Comment below. Do you prefer the high yield of Iron Mountain or the growth of Vertiv? I read every comment and I want to know how you are positioning your portfolio. Make sure you are subscribed because next time we cover the energy stocks powering these centers. The energy sector is the other half of this equation with some hidden gems you need to see. Protect your portfolio, stay disciplined, and I will see you in the next video.
And with that, we are done. Have a productive afternoon.